Alright, what's up? This is your market recap for October 14th, 2025. As you can see today, we played bearish on the day. It's because we had a pretty big expansion downwards for London session, but also a pretty big expansion upwards during New York session. So if we go down to the hourly time frame, we can see what I mean there. So we opened today's candle here, rallied up, and then from there, we rallied all the way down here back into this new week opening gap here, which is the difference between where we closed Friday and where we opened Sunday. Now, mind you, all of this is in extremely high volatility conditions. I can't remember the last time we've driven 500 handles in a single day on NQ. And this right here is a different market condition than we have been in. So it's something I just need to get used to. Will we continue to go higher? I'll talk about this again at the end. I don't know. As you can see here, we did rally, but we kind of hard stopped at the high of this hourly bearish fair value gap. So keep that in mind. So what happened? Market opened, ripped down again into this new week opening gap. In my opinion, there wasn't enough confluence today to take a bullish trade. Because yes, there is this, right? There is this. But that's what, 300 handles? You have no clue. As much as you'd like to think you do, you have no clue on whether it's going to come down more, right? Who knows if this was the low? We might have gone lower. And so that is what was holding me. If we hit equilibrium, understandable, right? But we didn't. Actually, and I learned this after, saw this after seeing what ICT tweeted. Look at the low of this sell side wick here, right? 422. And the low of today's candle here is 423.25. Now that's pretty close. Now, which candle to look at for that? Not a clue. But what I can tell you is we have this gap here, which appears to be what caused us to react. So that was for the first macro. The second macro, we had this slight retrace to this 15-minute fair value gap. And then a little consolidation before actually expanding and continuing our bullish move up again to this hourly fair value gap where we kind of lost all volume and kept closing inside of it. And then a huge fall to return us back into the range of this for the day. 5-minute fair value gap. So or inverse here, when I opened the charts, I saw these highs here. First thing I marked were these highs. These are all too clean for my liking. I mean, it's literally a straight line. Clean highs, a decently, a big run here. We're down here. Initially, I wanted to play bearish, right? Because I was expecting price to run up here, take these highs, and then come back into this new week opening gap. But what I failed to notice then is that here, if we go to the 15-minute fair value gap here, right? Go down to the 5-minute again. Here we are. So price rallies. Nice. We're trending what? Bearish. So come down, retrace to the 15-minute, right? So hey, maybe we're switching to play bullish. Boom. Try to take another high, fail, break down, 5-minute candle here, reacted off of this bullish fair value gap, then come down, close, come back up into it as an inverse where then the market opens, and we rush down. So once we hit these lows in the new week opening gap here and took out this low, I'll be honest, I was expecting us to travel a little lower into this gap, at least constant encroachment, which I guess, yeah, at least constant encroachment of it. If ES reached constant encroachment, that was also fine by me, but neither happened. And it may have been that daily discount wick. It may have just been, something else that I'm not seeing. But there was not enough higher time frame confluence that this is going to be that reversal point. So with this in mind, we came up hit these targeted highs, as well as a couple of these over here. I believe, yeah, all of them. But we took out this high. Then comes that 15-minute we retraced in during the macro. Yeah, there's an SMT of these lows, which you'll see on the 1 minute. We then from here rallied up to that high of that hourly, where you can see price is clearly grouping, and then we fall from there back into the range. Now, 1 minute time frame gives you a better idea of what I was looking at. So look at these highs. These highs are way too clean. There is a ton of engineered. When I saw this up here, first thing that came to my mind is this is engineered liquidity. This is going to be a target. Then, as I mentioned, 15-minute fair value gap reaction, possibly bullish, failed to take this high once again, engineering more liquidity, broke down not only below this low, but outside of this 5-minute inverse, traded back up into it, market opened, and we fell 200 points from there, taking out this low, entering this new week opening gap. The only confirmation that I got here that we are reversing to play bullish is this lower time frame SMT right here. Mind you, that's a 15-second SMT. So that could entirely just take us up to this high. That could be it. Right? Because I wouldn't put it past NQ to take us above this high, maybe an SMT there, and then take us lower to consequent encroachment. So personally, I did not have enough higher time frame confirmation that this right here is going to be the low of this new week opening gap. Now, there might be many things that I'm missing, but if you want to let me know what you found, please do. Who knows? Everyone looks at the market differently. Maybe I'm missing something. So from there, we ran up once again, targeting these highs. This was here because at one point there was, at one point there was an SMT up here. Obviously that's gone. Rallied again, took out these highs over here. Retraced SMT during the macro in this 15-minute. Now, would I have preferred a deeper retrace? Absolutely. But with how bullish we are already expanding 300 handles, honestly, I would expect us to go horizontal for longer. I mean, it worked, right? We did from this SMT, we did run up to this marked high here at 744.50. But we didn't start this actual move until much later, and I think that is because of this huge move here. Needed some time to kind of rejuvenate in a sense. So from there, we continued to rally up until we hit this high here. Sorry, the high of this hourly fair value gap once again. And I mean, price is clearly grouping here. So whether we are playing bearish or not, I don't know as of now. But one thing I can say for sure is this hourly fair value gap, if we continue to play bullish, will most likely become an inverse. Really depends on what I see between now and market open tomorrow. Since we're already talking about it, let's continue. So what do we know? Opened in a premium, rallied upwards, rallied down, dipped our toes back into this gap, expanded from there, dead stopped at the high of this sell side for value gap, continued lower from there, stopping at constant encroachment of this hourly fair value gap. So we're between these two right now. I say whichever one breaks first is the direction in which we're playing. We may bang around between them for a while, right? And I might come to it tomorrow morning and see that it's basically in the same spot, and in which case I would have to come up with something to do. But unless I have to think about that, I do not want to, because I personally, we're in high volatility. All right, just because we're in high volatility, I'm saying this is enough sell side move for the week. And as such, I do not think we will go lower from here, meaning that we are going to play bullish. Now, that is merely speculation. have no clue as to whether that is true or not, but there are these relative equal highs up here. Everything else is jagged everywhere else thanks to this. So yeah, I say draws are this high here, and then higher time frame these ones. But that's as of now, and a lot can happen between now and market open, so we'll have to keep that in mind. But this has been your market recap for October 14th, 2025.